Stocks end worst week ever. Stocks finish a terrible week with a wild day of trading, but still leaves the Dow with a 128-point loss after falling nearly 700 points at the open. The stock market has finished its worst week ever, with a dramatic rebound from even worse lows. The Dow-Jones Industrials moved more than 1,000 points during the session, from a low of nearly 700 points to a gain of more than 300, before falling back again. It was the first 1,000 point swing for the blue chip index ever. The blue chips closed down 128 points, or 1.5%, to 8,451. Twice during the day, the index fell under 8,000 for the first time since April 2003, and twice it bounced back. For the week, the Dow was off 18.1%. It was the worst week for the Dow in its 112-year history, and the worst week for the S&P 500 since the week of May 21st, 1933. The Nasdaq's 15.3 loss was its worst since the week of April 10th, 2000. A psychiatrist is what is needed to help investors today. By far, the largest problem remains a global credit crisis that has seized up. It has made banks in the United States and elsewhere unwilling to lend to each other. The crunch has threatened many businesses because they can't get short-term financing to fund daily operations. The crunch also has resulted in fewer customers getting approved for mortgages, car loans, and credit cards. And in addition, many investors have lost confidence in markets, government solutions to fix the problems, and corporate management skills. Things are still very stressed. We don't know what's going to fix it. They still don't understand what the bigger problem be. And it's still called, again, greed. Pure greed. The stock market plunge. The Dow has fallen 22% so far in October. Has forced many hedge funds to liquidate stocks to meet margin calls. Finance officials from the major industrials were meeting this weekend in Washington, D.C. to discuss this situation. Late Friday, they agreed on common guidelines to address the world financial crisis, a move, it appears, that opens the way for a series of government actions. But the Wall Street Journal said the agreement falls short of the joint plan that many investors had sought. They don't really know what to do. The governments of the world don't really know what to do they? No, not really. Among the guidelines, countries agreed to use all available tools to prevent systematically important financial institutions from failing and crumbling, and to ensure that bank deposit insurance programs are solid, to ensure that banks can raise capital from government as well as private sources. Many investors and traders were disappointed in the deal that hoped for a dramatic G7 accord, such as a concrete agreement to guarantee bank debt. And at the same time, Treasury Secretary Hank Paulson said the government will move ahead with plans to buy equity stakes in financial institutions, which means to buy stakes in the banks. So what happens if the banks fail? Well, they're setting up the taxpayers, the U.S. taxpayers, to lose a lot of money. A whole lot of money. The administration received authority to make direct purchases of stock in the $700 billion rescue plan Congress recently passed. The government hasn't had ownership positions in banks since the Great Depression. Well, there it is then. A wild last hour of trading. The last hour of trading Friday had been billed as potentially crazy, and it did deliver. There were reports that hedge funds are being forced to sell stocks to meet margin calls from brokers. The market is also being hit by redemptions by mutual funds. Well, you know how this goes. The next 2 weeks will be very telling, the traders and investors say. Also, nearly 1 in 6 homeowners underwater. After a severe housing slump that has pushed values down 30% in some areas, approximately 12 million households owe more than their homes are even worth. Yes, they pushed the price of homes up too far, more than they're really worth. Overpriced housing. The relentless slide in home prices has left nearly 1 in 6 U.S. homeowners owing more on a mortgage than the home is worth, raising the possibility of a rise in defaults. People will just walk away from it. It's already happening. The very misfortune that touched off the credit crisis last year. The result of homeowners being underwater is more pressure on an economy that is already in a recession or in a downturn. No longer having equity in their homes makes people feel less rich and thus less inclined to spend money. And having more homeowners underwater is likely to mean more eventual foreclosures, because it is hard for a borrower in financial trouble to refinance or sell a home and pay off the mortgage if the debt exceeds the home's value. A foreclosed home, in turn, tends to lower the value of other homes in its neighborhood, the ripple effect. Approximately 75.5 million U.S. households own the homes they live in. After a housing slump that has pushed values down 30% in some areas, roughly 12 million households, or 16%, owe more than their homes are worth, according to Moody's Economy.com. The comparable figures were roughly 4% of homeowners in 2006 and 6% last year, says the firm's chief economist, Mark Zandi, who adds that it is very possible that there will ultimately be more homeowners underwater in this period than at any time in recorded history. Among people who bought within the past 5 years, it's even worse. We have 29% underwater on their mortgages, according to an estimate by real estate website Zillow.com. Most homeowners still have some equity, and even among those who don't, many continue to make their mortgage payments on time. The financial bailout legislation could at least keep things from getting much worse by helping banks theoretically avoid the need to tighten credit further. Of course, this is all pretty much on a voluntarily basis. Still, expect housing credit to remain tight and home prices to keep on declining in much of the country for the foreseeable future. Most mortgages in default were issued in 2006 and 2007, when lending standards were loosest and the housing market was peaking. So, anyway, these are more signs of the end times, transition days, and all this is much bigger than they've realized yet. Yes, these are more signs.